If you don't already know, one of the major benefits why entrepreneurs choose to form an LLC in the first place is because of the tax benefits. Now, what exactly are those tax benefits? In today's video, I am going to talk to you about the 5 major LLC tax deductions that you may not know about. So you probably clicked on this video because you want to learn of the 5 major tax deductions you can make using an LLC. Hi, my name is Andrew. I'm an attorney here at MAHINAY Law, where we help entrepreneurs just like you start your businesses without dealing with the complicated legal forms. Our Done For You service is backed by over 2,614 5-star Google reviews, and we can help you start your business too. Now, before I start talking about the 5 major tax deductions you can make using an LLC, please make sure you hit the like, subscribe, as well as bell notification so you don't miss out on any future videos. Additionally, the information I am going to provide you now is not meant to supplement actual assistance from a tax accountant. Always speak with a professional who lives in your state. Now, without further ado, let's go ahead and talk about the 5 major tax deductions you can make using an LLC. Starting with the first one. The first major tax deduction you can make using an LLC are startup costs. As an example, if you received some sort of professional assistance and you had to pay for that information, for that advice, that would be tax deductible. Whether you paid a professional for advice, which eventually led to the formation of your company, that is tax deductible. If you spoke with a business tax accountant, if you had to pay some sort of flat fee to get all your documents filed with the Secretary of State to apply for your EIN, to obtain banking documents, all of that is tax deductible in connection with your startup expenses. Startup costs don't end there. In addition to potentially paying a professional to assist you with formation of your company, the next expense that you may have had to incur as a result of starting your company is marketing expenses. In today's age, marketing expenses varies. You have website marketing, you have SEO marketing, you have newspaper marketing. The reason why it's likely that you paid for marketing is because you want to be able to get your brand name out there. You want to be able to inform individuals and customers that you now have a company that can potentially provide them with either the product or the service that they're looking for. In order to determine whether the marketing that you paid for qualifies for that tax deduction, always speak with a tax professional. In addition to startup costs that are connected to marketing and advertising, an additional tax deduction that you may not have been aware of is coaching. If you happen to receive any sort of coaching prior to starting your business, if the coaching was related to how you should run your business, how to properly operate your business, how to create a solid business plan and structure, that coaching and the fee that you paid for that coaching may be tax deductible. So to sum up the first major tax deduction you can make using your LLC, you have startup costs, which include professional services, if you use a professional to assist you with forming your LLC, advertising, marketing, and coaching fees. That leads me to the second major tax deduction you can make using your LLC. The second major tax deduction is home expenses. But allow me to clarify. When I say home expenses, I don't mean personal home expenses. In the year 2020, a majority of individuals ended up having to work from home. It's most likely that these individuals created some sort of space, specifically an office space, where they could still stay productive and they would still be able to take care of all their duties and responsibilities. Now, entrepreneurs who formed an LLC, those same entrepreneurs that created some sort of home office space in their house, may be able to write off those home office expenses as a tax deduction. During the time an individual operated their business from home, maybe they had to make some sort of repair. Whether it be a light fixture, whether it be a socket, whether it be a faucet, repairs had to be made. In that case, that may qualify for a home office expense. And again, home office expenses are tax deductible. Now, before you go tax deducting everything in your home, be sure to speak with a tax professional who can help you clarify exactly what qualifies for a tax deduction connected to a home office space. This brings me to the third major tax deduction that you may not be aware of, and that is vehicle expenses. While the world saw a surge in online entrepreneurship, individuals who were not in the online space most likely had to travel for their business. Entrepreneurs who had to travel for their business most likely used their personal vehicle. At this time, this personal vehicle was used for two reasons. The first reason was for personal reasons, and the second reason was for business reasons. Now, before you start deducting all expenses connected with your personal vehicle, you want to make sure that you keep track and you keep a clear record of what expenses were for business and what were for personal. You never want to mix business expenses with personal expenses. Now, there are two main methods you can use when trying to calculate exactly how much you're able to deduct in regards to your vehicle expenses. The first method is by tracking your mileage. If you decide to use the method of calculating and tracking your mileage, you are able to deduct 58 cents per every hour you drive for your business. The main entrepreneurs this method applies to are Uber drivers, Lyft drivers, and truck drivers. As a rideshare entrepreneur or as a truck entrepreneur, you're going to want to make sure that you're able to calculate and track the amount of mileage that you travel. It's likely you're traveling thousands of miles per week. So make sure to take the necessary steps to tax deduct the business expenses you are allowed to tax deduct. Now, the second method I want to go ahead and talk about related to vehicle expenses is going to be the depreciating method. Now, the depreciating method is a little bit different from the mileage method. What this means is you are able to depreciate the vehicle inside of the LLC. Allow me to give you an example. Let's say a vehicle depreciates over the course of 5 years. For the sake of this example, let's say that the vehicle was purchased for $50,000. Using the depreciating method, this means that you would be able to deduct $10,000 each year for the next 5 years. And so to sum up the third major tax deduction you can make using an LLC, the first method is going to be the mileage calculation method, and the second method is going to be the depreciation method. This brings me to the fourth major tax deduction you can make when using an LLC. I talked about it a little bit earlier, but the fourth major tax deduction you can make using an LLC is going to be your immediate expenses. What your immediate expenses include is marketing, and so if you market using flyers, newspapers, billboards, websites, all of these would be considered immediate expenses. Immediate expenses not only include marketing, but it also includes equipment that you may have to purchase. For example, if you have some sort of business where computers are the foundation of that business, you have to purchase multiple computers, then that equipment may be tax deductible. In addition to equipment such as computers, those computers need software to operate and run. The expense that you incur in purchasing that software may also be tax deductible as an immediate expense. Now, the fifth major tax deduction you may be able to do using an LLC is going to be done through the S corporation. LLCs are the most fundamental business structure to start a business with. However, depending on the amount of income your business makes, LLC taxed as an S corporation may provide you with more benefit than you may have thought. Typically, when you decide to eventually elect your LLC to be taxed as an S Corp, the amount of income you should be making should be more than $65,000 per year. And do keep in mind that is gross income, after all business expenses are subtracted. By forming an LLC and having it taxed as an S corporation, the S Corp tax election would allow you to avoid the 15.3% employment tax that you would originally be responsible for with just an LLC. Instead of the 15.3% self-employment tax, you would be responsible for half of that, which comes out to approximately 7.5%. In addition to eliminating that 15.3% and cutting your tax responsibility in half, you will also be able to set payroll for yourself, which would give you the control to pay the amount that others in your field make as well. In addition to lessening your tax responsibility, an S corporation will also allow you to set your own payroll. But do keep in mind the amount that you set must reflect others in your similar field. What I mean by this is if others in your field, the majority make approximately $100,000, you can't set yourself a payroll of $10,000 and only tax deduct that $10,000 amount. The payroll you set for yourself must be reflective of others in your field. Now, if you happen to enjoy this video, please make sure you hit the like, subscribe, as well as bell notifications so you don't miss out on any future videos. If you would like to learn more about how you can use an LLC to make tax deductions, make sure you click the link in the description box below to book your free call with a professional who can help you better understand how to use an LLC to make tax deductions. If you'd like to learn more about business startups, LLCs, corporations, DBAs, sole proprietorships, make sure you go ahead and watch one of these videos here. It's time to invest in yourself. It's time to rise. If you would like to continue learning more about LLCs, businesses, online businesses, go ahead and watch one of these videos.